Welcome to Emma Knows Money. This show we have Cecily Welch, the accountant you can understand. And Cecily is not only a CPA, she's also a CFP. So I have the utmost respect for any CPA that takes it that extra step and gets their CFP so that they can truly understand what they're seeing when they look at their clients' tax returns. But today, Cecily, if you want to tell people kind of how you know about this, but there's a proposed tax plan that the Republicans have, and it's a 10-step, kind of a 10-part plan, and we're going to talk about that and just kind of some of the good things and maybe some of the not so good things, but just so that you know what they're proposing and whether or not it's something that you do want to write to your senator or congressman and give them your opinion on it. So tell us a little bit about the proposal, or what came about, or how you got to know this information.
Sure. Thank you, Emma. Very nice introduction. I've been working as a CPA for 25 some odd years, and specifically in the tax area for 15 or 20. As a tax professional, I work with a lot of different types of taxpayers, and as you can probably imagine, a lot of accountants, we're very numbers people. We like to stay in our lane. But I think it's important for the taxpayers to have a voice. Okay. As such, I've been appointed to the IRS Advisory Council. Before that was a 3-year appointment. I am also the current chair of the Georgia Society CPA's Tax Task Force, which means that as the legislature, both national and state, have a need for input on what's going on in the tax law, they come to us for opinions. So this is how I first was exposed to this particular tax plan last summer, before there was even a change in the administration. They were asking for several thought leaders their opinion on what their proposed tax reform was going to look like. So that's how I got when I was first introduced to it. Okay, and I went on
I was doing research for this, and I went on the Ways and Means Committee's website, and I see that they've kind of condensed it into kind of a 10-step plan.
Yes.
And, from a 30,000-foot view, the plan looks beautiful. Okay.
I concur. The marketing is wonderful. There are an awful lot of buzzwords in the 10 things that this particular tax plan would do.
Yeah, and so the first one, the first step, or the first thing that they're proposing is, just what this current administration has been hollering about, is just more jobs, more jobs, more jobs.
I think the key for us to remember is that we all agree on what we want as the same thing.
Right.
We want the economy to grow. We would like for there to be more jobs. We would like for there to be more opportunities. And that is spoken about throughout this tax reform plan. However, when you look at the details, there is no information on how is that going to happen. It is a very encouraging commentary about we're going to create more jobs, but frankly, when you look at the actual details, there aren't any details. We're talking about tax law here. There should be numbers, there should be calculations, there should be examples. None of that is in there.
So they're figuring that, they're looking at reducing the number of tax brackets from the currently 7 tax brackets right now. We're going to go down to 3. They're also looking at doing things like simplifying the taxation for a lot of pass-through entities. So if you're an S corporation, LLC, a lot of small business owners that file that way pay sometimes in the highest rate. So they're looking at reducing that down, and then also the corporate taxation. So that's the biggest thing, is they're figuring that if they reduce the corporate taxation, corporations will bring money back into the United States, and if they bring money back into the United States, that's also going to create jobs.
You're right. That is what the proposal states should happen. But when you look at the actual data, the research that has been done by every nonpartisan group out there, that is not how jobs are created. The corporate tax rate being 35% is what the rate is written on the books. Less than 50% of profitable U.S. companies pay taxes at all. And if they do, the average rate is 19%.
Okay.
When you look at how companies create jobs, it has nothing to do with taxes. I've worked with small businesses, large businesses, Fortune 100 companies. Just pragmatically, the only time companies create jobs is when they have more revenue, period. Period. The tax code might change who they decide to hire, but it's not going to change whether or not they hire. In the last several years, when you look at the corporate tax rate now compared to what it was 50 years ago, 50 years ago, the tax rate for corporations was 50%.
Okay.
The actual productivity and GDP was higher when the corporate tax rate was higher. Yes. Yes. When you look at 2007 through 2008, which we had tremendous economic growth in terms of corporations, in terms of profits, that didn't trickle down to wage growth. That did not trickle down to jobs. Instead, what companies did with that tax savings was they did stock buybacks.
Yes, they did.